where the buy trade came in. Look at where the rejection bounce was. Look at where the distribution was. You can recognize the distribution location for that sell. You can recognize how nice that distribution price was as a possible play. You could perhaps participate in it as a short sell. And then you look at this bottom edge here and you say, well, that's interesting. Look at how nice that test into that 45 level is. And the idea is, well, why not take a shot at maybe a little bit of buy-side business from that spring trade? Taking you back towards that same distribution price, and a break above this price level could bring us to a possible break back towards the 57 handle, of course. And that would be very, very, very nice indeed. So we're going to see if we get a break above here. So where do we get dealers' keys? Well, we get dealers' keys from a combination of different things. It's levels, it's liquidity in terms of options activity. Where do we see dealers' keys? Well, we see dealers' keys by simply typing in vol to vol on the CME's website. Vol to vol in the CME's website gives us some starting points for some of our key dealer key levels. If we look at gold or oil, we get them for gold and oil. If we look at the S&P, we get them for the S&P. And this is currently the gold narrative, isn't it? This is what we've got just now on gold. You've got some lovely slippy sell side business here, and it starts to get slippy buy side business potentially above 60, 65. So we know these things, we recognize these things, and then we put them on the chart. Why do you think we were all looking at the break above the 60s for possible sell side opportunities? Because they're dealers' key levels. Why are we focused around the 55 level? Because 55 happens to turn out to be a very large volume area. It doesn't sound like it should be a large volume area, but it's the second largest sell order that we've currently got is at 55, the 50 being slightly bigger as well. The slightly being 50 bigger. So the 55 sells are visible on that screenshot, aren't they? There they are. Look, we can have them for nothing. Look. The 55 sell orders there, the 50 sell orders there, the 60 buy orders there, the 65 buy orders there. They're on your charts already, right there. Look. These are crazy opportunities to take a shot at 55 offered and take a look at it, the possibility of riding it back towards that 65 bidder coming in. Do we want to buy it? Well, I personally did not want to buy it. Sure, I didn't. I know where it is. I didn't want to buy it. I was short from 65 to 52s. Could I have bought it? Well, maybe Reeve decided to buy some. Did Reeve decide to buy any? I didn't like it myself, but some of you guys might like it. Anybody decide to buy that 55 liquidity? I mean, we bought it, but we only bought it to close the short sell, right? That was all we did, was we covered our short position here at 51s, 52s. That was all we took, right? And then the prices obviously drifted back towards the prior swing highs, where we might be able to pick up some buyers to sell to above the 65s again, but I don't know yet. We'll have to wait and see if that's a thing. How's our oil long trade doing? Well, we have pushed on past the 25s now. We've traded 35s, nearly 40s. I did suggest earlier that we would be, if this keeps going the way it should go, we should be able to trade 71.50s. There is a slight problem in the way. What's the slight problem in the way, Paul? I'll give you a clue. Why is Paul got his dicky bow on? Well, it's because it's the oil baron's ball, and he's suited and booted and ready to stomp on some heads, right? Suited and booted and ready to stomp on heads. So what are we looking at? We're looking at the EIA numbers, right? We're looking at the EIA numbers. Here they come, here. So what are we looking for here? Well, we had a boo-boo from earlier on this morning. Did we have a boo-boo from earlier on this morning, Paul? We absolutely had a boo-boo. So what are we talking about when we talk about boo-boos? A lot of people think that because you've came in here for a workshop on effectively what is a technical process, the probability distribution is a mathematical process, if you like. That's not what all we trade in this room. We trade probabilities, but we also trade R squared. We trade fundamentals. We trade in the pricing discount or the price discounting function of the markets. And the price discounting function of the markets tells us we should have been buying oil today. Buying oil. We had bullish, we had neutral, bullish, and therefore any bottom edge we should be buying for the data. Does that make sense, Paul? I'm sure it does. I mean, you've been here for a while, so that makes sense to every oil trader, I'm sure. We're buying to discount the forecast, which is bullish. And if we haven't discounted the forecast, we haven't discounted feck all, have we? So we've got to make sure we try and trade the highest probability. This is how you're supposed to trade fundamentals, by the way, guys, if this is the first time you've heard from us. It's not about trading the data release. It's about trading the fundamentals before the data even comes out, because they're the high probability fundamentals. Why are they the high probability fundamentals? Well, because we already know what they are, right? We don't have to figure it out. We already know what they are. Now, if you don't know this, interestingly enough, Paul did mention Boo Boo. Any idea, Paul, when it was? I'm trying to find the tweet so that so I'm trying to find your chatter in the room so that I can actually point it to everybody that this was actually known in advance by Paul, who's in the room. So, any idea what time you mentioned it, Paul? 4 hours. 4 hours ago. Oh, there it goes. Go back 4 hours in my chat.